Friday, February 7th, 1:54 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to go over a day trade that was made today, as well as the past few days. Using charts, I day traded the S&P 500 futures. As a derivative, day trading is when you open and close a trade the same day. That's a day trade. You're not holding it overnight. That's a swing trade. The term scalping is also day trading. Scalping is typically when you're in for a few ticks, a few points, maybe a microsecond, short term. So the S&P 500 futures, which trades on the CME, one of the United States futures exchanges. Looking here at 20-year history, each candle's a month. So the current month, we're not done yet. Here we are. Yellow candle simply means we didn't take out the high or low of last month. We're below the high of last year. And this yellow horizontal line is the low of this year. So it's a consolidation phase. For me, day trading, it's important to understand the higher time frames, be situation awareness, potential trade ideas. So since this is occurring, this was less important to me for day trading and scalping. Nor did a setup occur specifically off this time frame. You hear that word? Specifically? Because the higher time frames I do get trade ideas off of for day trading, as well as swing trading. This is the weekly chart. Again, yellow horizontal line, the high of last year. This yellow horizontal line and the low of this year. I look at this in the morning before I start my trading, see if it changed. Because the S&P 500 futures trades from overnight, opening at 6 p.m. New York time and closes at 5 p.m. New York time. So look at this big green candle here, big body, red horizontal line. Past 2 weeks have been closing above it, that green candle, that red candle. This week, we broke below it. Also, we're making a lower high, lower low. I have a gap down here that has not got filled. Again, the main thing here was to me of interest to take consideration for the day trade was also this midpoint on this big body and this gray zone I have labeled off that prior week. We're back above it right now, but it was different earlier in the week. The daily chart. This current red candle is right now, today. Sweet spot. This big red candle here, big tail, that zone I drew, sweet spot. We tested it today. Beautiful trade idea right off of that. It's one of the several updates I shared to my Patreon members today in the past few days, the ones that are on my higher tier levels for trade ideas. Nice. Let's take this to the intraday faster time frame. Down to the 15-minute. This is today since overnight. This green area on the left is the Asian session. In the middle, the purple, the London session. And all this here was into the New York session. So this green candle here, the big one, high and low trading range. There's economic news during that session. And then this big red candle, there was other economic news during that period of time. A lot of volatility. U.S. economic news I'm referring to. On the 5-minute, right here, show you how some of my strategies were working. So first I have this queued in with the drawing from the daily. Again, I made the zones here off the higher time frame daily. We came in and tested it today, right there. Interesting time. I'll zoom in again so you can see a little bit more. Take it from the, there we go. So again, right here, that big red candle, 8:30 economic news, huge volatility. Briefly after that, we had a run up into that green candle up there, 9:50 a.m. Again, economic news was 10 o'clock. So early warning where we were right there, situation, Nice for the opportunity to take a trade into the news, close it before the news. Again, 5-minute candles. If you're scalping, it's okay. I'm not looking to be in a trade for 10, 20, 30 minutes. Nope. Opportunity to make money on that short. Good job if you took it. Nice. And then after the news, yep, nice. Let's take this to the other drawings I've done. The 4-hour. And looking at the 5-minute chart, but with drawings I have on the 4-hour. Key levels. Red. Horizontal. Big round number, 6,100. There and there. Again, to show you a little bit more. Opportunities up there. So this drawing here I have, again, the volatility before the New York session right here because of economic news, the run-up, the dump, key levels of zones I have drawn here for trade ideas. Nice. Let's cue in another one. Again, use the 5-minute chart, cue in my drawings I have. This is the 1-hour. See this top zone I have, this gray area, and that red horizontal line? Yep, opportunities. So again, I wasn't trading in the position, holding a position during this news at 8:30. It occurred. I already was situational awareness where this red line was, what the zone was. We ran up into it. We reversed. Opportunity, sweet spot. Several things I showed you here on different drawings had this price level here for the sweet spot. And the dump into this area that was pre-labeled zone. So again, opportunities gone bearish, aka short, with targets down here. Closing out positions as you're going down, locking gains or tightening your stop. Nice. I choose this financial instrument. You go ahead and continue choosing the one you want. Give you some insight why I choose this one. Again, the liquidity is one of the best, or if not the best, on this financial instrument, as well as the stock ETF, as well as the options. Big benefits. Trading the right financial instrument that has the liquidity, tight spreads, the regulatory exchange that's on its side. What I mean by that is it's regulated. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.